Before we get started, please keep in mind this video is for informational purposes only and does not constitute financial advice or legal advice or investment advice. All projections and figures discussed are hypothetical. They should not be interpreted as guarantees of future performance. Please consult with your own financial advisor and your own legal advisor before making any investment decisions. Welcome to Tsuri Capital Partners. Today, in this sample case study, we learn how a $100,000 investment in this $85 million, 480-unit multifamily syndication performs over 5 and 10 years, including cash flow, tax savings, and wealth-building returns. Let's dive into the details of this case study and see how your investment performs over 5 and 10 years. This property offers 480 units, average rents at $1,368 per month. It is 96% occupied with annual expenses of $3.57 million. And there is $1.48 million in other income. The seller's asking price is $85 million at a 5.7% cap rate for a strong market deal. The net operating income, also known as NOI, is $5.3 million. This backs up the wealth-building opportunity with solid numbers. We financed it at 65% loan-to-value and received a $55.25 million of senior debt with a 10-year term, amortized over 30 years, at 6.12% interest with a 36-month interest-only period. The investor pool brings $29.75 million in equity. Your share of the equity is $100,000. At month 36, we'll refinance at approximately 70% LTV at a projected 5.25%. Same amortization and interest-only periods will then recapitalize the investor pool with the proceeds of the loan and return your initial investment of $100,000. Each month, you can expect distributions from free cash flow, typically between $500 and $666. Annually, that's a 6 to 8% cash on cash return, or about $6,000 to $8,000 per year. After 5 years, you'll have collected $30,000 to $40,000 in free cash flow, plus any upside from refinancing. When we plan to sell in year 10, your IRR ranges from 13 to 15%. And your equity multiple could reach 2.3 to 2.6 times. That means your total proceeds could be in the $230,000 to $260,000 range. This includes cash flow, refinance proceeds, and appreciation from the sale, all from a passive $100,000 investment. That's the power of long-term real estate investing, growing your wealth over time. During the first 36 months, interest-only debt boosts distributions. At refinance, value creation allows new proceeds. A portion of equity may be returned tax-deferred. Amortization reduces loan principal, property improvements, and rising rents. It supports appreciation, multiplying investor wealth long-term. Now, let's talk about tax efficiency. Multifamily real estate offers annual straight-line depreciation, which can help reduce your taxable income each year. With your $100,000 share, you may see over $3,000 in deductions annually, sheltering much of your cash flow. Cost segregation lets us classify assets into shorter lifespans, allowing for upfront bonus depreciation. In the first year, you could see a paper loss of $10,000 to $20,000, often more than your distributions. For most investors, this means little or no taxes on cash flow for several years, with passive losses carrying forward to offset future gains. At year 10 sale, your investment is returned plus profit. Depreciation recapture may trigger some taxes, but strategies like 1031 exchanges defer gains, compounding your capital. Annual K-1 statements detail tax deductions, cash flow, and investment activity, helping build your legacy efficiently. We are not offering tax advice here, so consult your tax professional on the tax strategies discussed specific for your individual tax situation. In summary, this sample case study shows how a $100,000 investment can help you earn passive income, grow your equity, and reduce your taxes through multifamily real estate syndication. Are you ready to grow your wealth with purpose? Connect with Tsuri Capital Partners to receive your free investor guide, schedule a personal strategy session, and get access to exclusive opportunities. Start building your financial future today. This video is for informational purposes only. It does not constitute financial advice. It does not constitute legal advice. It does not constitute tax advice. All investments carry risk. Past performance is not indicative of future results. Please consult with your own professional advisors before making any investment decisions. Surrey Capital Partners is not responsible for any actions taken based on the information provided in this video. Thank you for watching.